Hi, how are you all doing? Good afternoon, good evening. Welcome to another stock market Q&A session, a show that has become a classic in the Locos the Wall Street lineup. And I see some of you are already rushing to post questions in the chat. I like that because it means the show has been really well received. And what's more, it keeps going every Thursday or Wednesday. We'll see. We'll always announce it. We'll have this weekly Q&A session where we cover a topic, which we'll tell you about in a moment. But after that, we let your questions run wild as they pile up in the chat. I'm going to say hi to my colleagues who are here with me today. Miguel, how's it going? How are you?
I'm great, Antonio. Really looking forward to this Q&A session. Our portfolio is still at its peak. At this rate, we're not going to stop. Well,
today is turning out to be a tough day. Today we're really getting hit hard, as someone I know used to say. But yeah, honestly, well, we're long-term investors, just for the record. That's always what people say during downturns. Albert, how are you?
Yeah, like you said, Antonio, today everything turned around, well, with the news about the regional banks. We'll talk about it a bit later, but it's really nothing serious. What's surprising is that if you look at the usual, well, you'll put it in the Sanhedrin this week, right? But the sentiment thermometer you always show at the beginning was already in fear. So it seems like there's not much tolerance, right? Between Friday's scare, let's say, and what happened today, there's very little tolerance for even the slightest correction.
Absolutely. Well, look, we also have here, let's send a greeting, Diego Puerta, Mr. Puerta, greetings to the community friends. You know, follow him because he's a real show. He was on the Sanhedrin this Sunday. And well, as we were saying, we're going to structure today's show. The first thing we want to do is tell you something that just yesterday was. Let's call it news. I'll give you some background. We already had a live session for Financial Reserve subscribers, led by Albert, where he talked about portfolio rotations, how he sees the main positions, where he would be preparing them, and so on. Please understand that, out of respect for the subscribers, we can't make it public and all that. And during this whole program, some letters from a great investor, Nick Slip, came up, which Albert will tell us about now, where Albert himself said yesterday on the show, hey, I've been looking at these letters because he already faced a situation like the one we're in now, with valuations, and how he did a rotation. It went really well for him, and we have to learn from these great investors. But before I hand it over to Albert so he can tell us about the main topic of today's show, how Nick Slip is preparing us for the next coming crisis and the lessons Albert is drawing from it, let me share some breaking news with you. InvestiPro, as you know, a partner of Locos the Wall Street, has launched a flash offer that ends tonight at midnight with a 45% or 50% discount depending on the plan you choose. And if you use the link, if you go through the link we have in the description, and I'll also share the QR code on screen right now, along with the code LWS, you get an additional 15% off, meaning a total of 65% discount. For anyone who's been thinking or has thought, hey, Investi is a good platform for data and all that, well, the offer ends today. If you're watching this tomorrow, I'm sorry, but it ends today, Wednesday, at 11:59 p.m. Looking at who Needle Sleep is, what he shared, why you're paying attention to him, it's because you're studying how valuations are looking and where to position the next investments that will be added to the model portfolio for our subscribers. Tell us, are you muted? Or not? No, sorry.
Sorry, yeah, the presentation thing kind of froze up on me. So, what I'm saying is that in the end, I think we can all pretty much agree that current valuations are quite stretched in the market overall, and especially in some stocks that have gotten more hype or more tailwinds from the narrative in recent months, like artificial intelligence, also some of the small, well, modular reactors, the nuclear sector, quantum computing, and so on. So we're already seeing some signs of even unethical practices, like the deals between OpenAI, AMD, etc., which have pushed valuations into somewhat extreme territory. This is nothing new. Every so often there are narratives that always get these tailwinds, but because of the magnitude of the impact this can have and how it's also affecting the market. It's not the same when it's a small sector that barely gets any attention as when it's the main sector in the market, right? So this actually reminds me more of other times or other market moments, like the 2000s you mentioned. And that's always a good thing. To read, to learn from how great investors in the past have experienced it, how they've positioned themselves, how they've acted, because we can learn from their experience even if we haven't lived it ourselves. So, in this case, Nick Sleep, as you said, is a fantastic manager who achieved very, very, very good returns for quite a long time, and he had a fund, right? The Nomad Fund, and he used to write letters, kind of in the style of Warren Buffett, though not as long, and above all, they didn't last, but they were of very high quality. In those letters, he would talk about how his positions were doing, how he saw the market, and he always included reflection. In one of them, after 2000, he pointed out that there are big, defensive companies with little growth but good performance, cash generation, returns, that the market loses interest, multiples contract, and they are shunned, while the latest tech companies, whatever is trendy, matter. But eventually, obviously, what really matters is cash flow, and the market ends up turning around, and these companies deliver very good returns. It's a good place to position yourself, to protect yourself, and to get good returns when everything shifts, because they don't need to. They don't need the market to collapse for things to go well for them, just for everything to normalize, for them to keep generating cash. They're already cheap right now, but if the market starts to get scared and moves toward these more defensive companies, there could even be a re-rating, which would give you a short-term gain. You're on mute, Antonio.
You're on mute, Antonio.
Sorry. Miguel, I was asking if you knew Nick Sleep.
Yes. I knew about him because Marito Quintana mentions him frequently, and I'm quite a fan. And I try to read pretty much everything he puts out. It's true that just this morning I was talking to Albert because I wanted to read the letters, since there are many I haven't read, but the letter that Albert sent specifically, I haven't read.
Well, Albert, and actually, that's the situation you were talking about yesterday with subscribers, right? Looking at some ideas, as we said, we're not going to discuss them. But we can talk about something very interesting, which is precisely the report that reserve subscribers got access to today. If you want to talk about it, Albert, yesterday. Yes.
Today I have several things to go over. The thing about defensive consumption and also the part about the report, as you mentioned. And, well, you know that with the aim of covering more and more sectors, because what's trendy now might not be in the future, knowledge is built in a modular way. That is, you can learn about a sector that maybe right now you're not interested in valuing or covering, but later it might become more interesting, things change, etc. And all the knowledge you gain, you'll be able to use it, whether now or in the future, to, as I said, accumulate market knowledge, company insights, and so on. So, with that goal in mind, what we're doing is expanding our coverage universe, and hold on, I'm going to share my screen, Antonio.
I was going to share the restaurant report. Do you want to share it instead?
Yes, I was going to do it.
All right, perfect.
Okay, this is it. Let me know when you can see it.
I can see it.
All right, so this is the report we published yesterday, as you mentioned, which was done by one of the analysts on the team, Arka, who will also do a live session to go over the details and answer questions, right? Subscribers might have questions when reading this or want to dig deeper, and we'll address those. We're also going to include it in some sector-specific company theses. We'll just touch on that briefly out of respect for the subscribers. But as you can see, it's a very comprehensive report where we cover financial metrics, types of restaurants, we compare them, and discuss how to understand or analyze an industry. Because obviously, you can have some basic tools, right? For example, free cash flow. That works for valuing any company because, in the end, what matters is how much cash it's going to generate. But obviously, there are specific metrics for each industry that are very important to know because you could be missing part of the story if you don't analyze them properly, right? And a very simple example comes to mind, REITs. In the end, if you analyze Sosamize or REITs based on net profit, you'll miss much of the story. Because depreciation is a significant factor, there are accounting adjustments. So, what is used instead is funds from operations, known as FFO. If you don't know those metrics, what you should be studying, you're probably not going to do as good a job. It's like using a general purpose tool for everything. You can get by, but if you have specialized tools, gets better. In restaurants, it's a typical example, and the reception has been good, and I'm not surprised, very high quality.
Extremely high quality. It's done by an analyst who works in the industry. Obviously, he also uses pseudonyms and so on. But he's a professional, and above all, it's not just an analysis of the current situation, of how all the restaurant sectors are doing with the main 20 to 30 companies that are operating. For example, MT Group is in there, and so on. But also ongoing follow-up that we'll be doing on the channel, with questions that subscribers can ask the analyst, ARCAD, during the live session we're going to have. And the most interesting thing is having a starting point. And from there, well, if you see that valuations are changing or new opportunities come up, we already have that sector analyzed. We're adding other sectors as well. We're going to include the payments sector, the luxury sector. Those are the ones we're already working on. And all of that, well, will be available for subscribers. In the end, as we said yesterday, and I won't go on any longer, let's get to the questions. We told subscribers that the goal was to turn WS Financial Reserve into the retail investor's guide. In the end, the big funds always have these sell-side services where they can say, hey, I want a report on how the restaurant sector is doing. Boom, they pay thousands of euros, and retail investors should have access to that too. Albert, let's go.
Let's start before the questions, which we see you're already gathering with a stock, which is interesting for the reasons we mentioned, Envio, Miguel, Antonio.
No,
No.
no,
Miguel, do you know it?
no.
All right, so look, this is a spin-off from Johnson & Johnson, which, as you know, had problems with talcum powder. They wanted to get rid of it because it caused cancer, etc., and reduced litigation risk. So they spun off some brands, including Tylenol, Band-Aid, the bandages, Listerine, etc. These are iconic consumer brands in beauty, personal care, etc. They also assigned to the spin-off all responsibility for talcum powder outside the US and Canada. The biggest issues are in the US and Canada, but any litigation elsewhere would also fall on Kenview. So this company will be trading at 24, 25 times earnings, a bit expensive, generating about 80 to 90 cents per share. That's about 20 to 25 times earnings, right? They said they would grow more, but at 20 to 25 times earnings, it's expensive. Margins started to deteriorate. You know that when they launch something, they usually make it look really good, and then it doesn't end up that way, right? We saw the same thing with Puig and other IPOs that have happened. But still, the quality of the brands and how defensive they are, even though volumes were dropping, you know that consumption is also weak, consumers aren't doing so well, and so on, remained intact. To sum up, we get to this year, 2022, 2023, you know, it's flat. It pays a reasonably high dividend, 3 or 4% at this price, and suddenly Trump comes out and says that Tylenol, which is basically like our ibuprofen or paracetamol, I'm not sure which of the two, but you get what I mean, for everyday use. Yeah, and from their brand. And he says that it causes autism in babies if pregnant mothers take it. This starts to plummet. From 20, it drops to 18. They hype narrative. Trump tweets people shouldn't take Tylenol. This is 10% of the company's sales. It's significant, right? Today, news came out. You can see it drops more, another 11%, not in this chart, hit a lawsuit, talcum powder in the UK. So, this is a company that now is trading at a PE of about 12, with a dividend yield of 5 to 6%, with very strong brands, and they're starting to turn things around with their margins, or at least that's what they're aiming for. So these are companies that, in this case, have some specific litigation issues and so on, which I consider separately, right? But it's a defensive consumer company with quality brands and good margins, etc. That simply went from having a rating of 25 times earnings to 12. And eventually it's likely that these kinds of companies, and I'm not talking about any specific one, I didn't bring it up today because the news is about rap. It's current, and we were discussing others that I find more interesting in defensive consumer or industries that won't suffer as much when everything turns around. And right now the market isn't interested in them at all.
Today it's interesting. There are options, but the thing is they don't pay much. Despite the drop, the implied volatility isn't too high, or at least that's what I'm seeing from the premiums. But it's interesting.
What we see here is a company that is growing very little, or practically not at all, whose profits have been reduced due to margin problems that are now going to start increasing. And as I said, if they manage to turn around this trend of deterioration, then it could be interesting.
Well, but from what I see, they were pretty similar, right? I mean, there hasn't really been a big drop. So, is EBITDA staying the same?
Yes, check out net profits. The EPS, you've gone from 1.22 to 0.54, an outlier, then to 0.90. You've had some deterioration in margins. Not EBITDA, but underlying figures and financial costs. A lot of get loaded.
All right then, let's start with Dynacor.
Yeah.
All right, so listen, if you agree, let's start with one that's gathering several questions, which is Dynacor. In the end, all the questions coming in about Dynacor are along the same lines. That is, people don't understand how, given the correlation it should have with gold, this stock isn't going up more. So, for example, Pablo Postito is asking us here about the trend of gold. And also here Cesar says, I'm surprised by Dynacor. If it doesn't depend on gold, what does it depend on? Or is it that the local producers just don't want to make money? Well, there are doubts about Dynacor. Here's another one from Gerardo as well. Yes, let's see.
Antonio, yes.
That's from Gerardo. It's the same. Gold is soaring and Dynacor isn't going up.
Yeah, in the end, it's normal to have these doubts because obviously, if it's a company, even if it's an industrial one, that has more or less stable or relatively stable margins, and above all, it's related to gold, then obviously if gold is at its peak, it's really strange that this just keeps falling. What I'd say here is, obviously, you have to wait for them to report because they need to start turning things around operationally in terms of volumes, etc., since they've had problems and the market needs to see that. And so I think that will be a clear catalyst. And the second thing is that it's a company rated or classified as industrial, and the market doesn't even associate it with gold. This is a small cap, a very, 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 very small cap, and right now it's out of favor. So, when you don't have the market's attention and you're not associated with gold, in the end, even the algorithms or the funds that follow factors, thank you. What they're looking for are mining companies, or at least companies with direct exposure, and in this case, they just don't associate it with that. So I would say that there will be a catalyst when this company actually reports and it becomes clear that it's executing and performing much better than expected. but that's how it is. In fact, other companies, even gold companies, purely producers, and examples mining companies like Mako. It's true they've done a private placement, but honestly, they're not doing well compared to how gold is performing, surpassed 4,300.
Miguel, let's keep going.
Pablo Postigo, who also asked about Dynacor, but has also asked, "Good afternoon, what do you think the price of oil will do in the short or medium term? Is it really sustainable with prices this low?"
Well, sustainable it depends on how long it lasts, right? In the end, they already managed to refinance their 2026 bond, so now they have the 2027 maturities left and part of 2028, which we'll see when they refinance. They also hedged their oil, covering their production at 65 to 66, which is obviously going to work out well for them, especially compared to where prices are now. But if oil stays around 50, just to give an example, for 2 years, then Kosmos is going to be in real trouble and they'll probably have to raise capital at rock bottom prices and destroy a lot of value. So the price of oil is the key variable. In the short term, I do think it could suffer, We're clearly in a surplus situation right now. We'll see how long it lasts. The lower the price, the shorter it will last, because this is reflexive, right? In the end, if oil is at 50, companies are going to cancel a lot of capex campaigns and so on. And what that's going to do is accelerate the reversal even more, right? But well, in the short term, I'm not that optimistic about the price of oil, and Cosmos is going to suffer if things don't turn around quickly, of course.
Chavi as well. Sorry.
Put it up, Miguel, you put it up.
Yes, that's an option talked about, as you can see, Gola. I encourage you, Chavi, both this one and I'll ask you, but check out several Q&A sessions Albert has done. But if you want to answer, Albert.
Yes, Golar, there's nothing. It's a company whose cash flows are far off, and the market dislikes that. Unless it's a tech company, the market wants cash flows now. So with Golar, since those cash flows will take a while, it's just not of any interest. The situation in Argentina is weighing it down. The elections are at the end of the month, on the 26th, in 10 days, and Milei's party has seen. Chances of winning, or the expectations about it, have deteriorated. I think he'll win comfortably, but after the Buenos Aires elections, the market doubts if that'll happen, right? So, Golar is being punished. I also brought the chart for Grupo Galicia, an Argentine bank that peaked in January at $70. Then it traded sideways around 55.60. After elections, which went so badly, it dropped 50%. Now it seems to have recovered slightly. It's at 33. There's a long way to go from where it was because of the elections. Golar's case hasn't been as bad as the market isn't stupid and knows the impact. But still.
Hey, Albert, I wanted to ask you a question since you mentioned Grupo Galicia. In the banking sector over there in South America? What do you think about the neobanks that are popping up in Brazil and that whole region? Do you think they could take market share from Grupo Galicia in Argentina or not?
For Grupo Galicia, it's tough, especially in Argentina, but there are others, like, for example, I guess you're also referring to, I don't know, Nubank, etc., right? They're doing really, really, really well in Brazil and growing. I like it a lot. It's NAB Holdings. Here we can see it in the fundamentals, just like Miguel was saying. You can see the growth this has. This is an absolute rocket. It's growing a ton. Don't think it's growing unprofitably, okay? I mean, obviously at the beginning, yes, but now it's become profitable and it's really a rocket. Now, the market has also punished it quite a bit. Lately, I haven't been following it for a while, but it took quite a hit. Look, it seems like it's already recovered. When I saw it, it went from 14 down to 9. It had been hit pretty hard, and now it looks like it's starting to bounce back. In the end, these are companies that grow tremendously. I think they have better business models. We'll also see next year if Revolut goes public, as it seems it will. It's an example we have here in Europe on a global level, but with expertise in Europe, and I really like them. They might not eliminate the business, but they will definitely be able to compete in many areas, and if you're looking for growth or explosive exposure, it's much better than Grupo Galicia.
All right, document. Look, now let's go with another question from Xavi. He asks us, can you audit the performance data of the model portfolio? Paco Lodero audited it a few years ago. Is it possible to audit it for a low price? Yes, I heard Paco say that he audited it. Let's see. Now Albert will answer you, but there is an audit. It can also be audited. In fact, we are actually audited every day.
Yes, in the end, we have more than 1,000 people who see it daily, the live movements, etc. It can be audited, of course, and in Paco's case, it's great that he did it. Also, with the fund he said he was going to set up, etc., I understand it makes more sense for attracting capital and so on. But for us, since our goal isn't to set up any fund or anything like that, I don't see the point. I mean, if it's because there are people who might not believe it, etc., which is what always happens in the end, right? We know there are people who doubt someone can do well, or even better. We don't care. We owe ourselves to our subscribers inside. None doubt it. They see it every day. No comments. You, Antonio? No one has ever questioned that. Then you can ask my testimonials, etc. Those are the people I care about. If they ever doubt it, then I would care, because obviously we owe ourselves to our subscribers. If someone from the outside sees it and says, hey, how come you're going over 30 something? Because, look, I saw you had this position and it went badly, etc. Well, that's just armchair talk, to put it simply, right? Because if you're still in, well, you might see a position at a static moment, but you haven't seen the ones we've closed. You haven't seen how we position ourselves, just a snapshot at one point or another. It's fine. In the end, it adds a bit of drama, but it doesn't really contribute much. So if anyone from our team, Antonio Interno, has any doubts, then yes, we can audit it. And of course, there's no problem being transparent. But honestly, I don't see the point. In fact, for those who don't know, well, we already have, as you know, the model portfolio of.
It's posted on the website in real time. It's actually up there in real time.
In fact, I was about to show it now, if you want, in real time.
Also, I know some users who, and I think it's fine, keep their own Excel sheet with the model portfolio, entering all the results you post every week, keeping track in their own Excel. I mean, that's what you say. What's the point? Today we bought Terra or Telefonica or Go Weeks. That's it. But it's normal, you know? It's normal, and it's healthy to have doubts.
Don't let the positions show. Tell me when they're visible. Also,
You can see it.
you can see it. This portfolio we've had virtually since this year. The others we've shared elsewhere, but you can see it in real time. We also share everything from a month ago, because someone might ask, how has it been over this period? Over a month. Well, in a month since September 16th, it's up 13.95%, even with today's drop. Yesterday, it was up 18%. Over a week, it's similar. There was positive, and now it's not due to the drop. But year to date, it's the same. We share everything in real time. It's easy to see. You can see it here. Then if it dropped on you in June, It's easy to see from when we started replicating it, and there's no mystery. So that's what we owe ourselves.
All right, Miguel, let's keep going.
Yeah, Chavi was also asking about a sector that's been talked about a lot. What do you think about it? I mean, I bought Coca-Cola. I see defensive consumption holding up against those drops. What do you guys think?
Coca-Cola always seems expensive to me, but its price is justified by its resilience, track record, and quality. Still, it feels expensive.
So the returns are going to be lower because of. But it's the kind of sector we were just talking about before, which can be interesting, defensive, and so on. So I like Coca-Cola. It's low growth. We even see some years without growth, and it's a bit expensive. But well, within that, it fits with what we're looking for.
In fact, Chavi, I recommend the last Q&A session. If I'm not mistaken, Albert talked about a lot of companies. He talked about Monster. If I remember correctly, he talked about. I know you talked about a lot of consumer companies and one similar to Coca-Cola. So if you want to check it out, I encourage you to do so.
Look at this one. I'll take it. Global Atomic. What happened with Global Atomic for it to drop so much? Well, what happened is that there was a new capital increase, and that's just how it is until the financing comes through, meaning the approved funding. There's a lot of rumors. People who follow the company have been sharing over the past few months different, let's call them signs that it's about to happen, like agreements or documents from the World Bank saying, we're making progress with the Niger region, and so on. But the reality is that unless mine financing comes through, or unless they go down another path, which actually has a lot of opportunities, though I think CO Roma isn't really paying much attention to that, in my opinion, as a shareholder, a joint venture with a major or with a bigger uranium company would be the way to go. It doesn't even have to be a major like Cameco or anything. That's just what needs to happen. Another capital increase is needed. There are a lot of people today who are buying, a lot of uranium experts, and others who are uranium experts are saying, as we've been saying, this company, well, that's just how it is, and that's what's happening. David, another capital increase. Let's hope it's the last one.
Albert, this is one sector I haven't heard you talk about. Time for luxury. Moncler, Louis Vuitton, do you think they're fairly priced right now? In fact, just a few days ago, Louis Vuitton reported and had quite a big jump.
Well, in the case of Louis Vuitton, if you've seen the results, honestly, they've been pretty weak. What happens is that when the market is expecting a disaster, any small improvement drags things up for you. Let me put it where it belongs. When the market expects a disaster, any little thing that gets better lifts you up.
It's a company that had tremendous growth, but in the last year it stopped growing, especially in the leather goods and handbags segment, its main driver.
That's something shared by many others.
We saw the same thing with Moncler, with Burberry, although obviously it's a step below, but just to mention more companies. We see the slowdown in growth, with China not driving things.
I like these companies. Luxury aren't quite as much. If we're talking about true luxury, Hermes is the pure luxury. This doesn't slow down growth. 2021 was extraordinary, so we shouldn't count that. But if we look at the last 10 years, it has steady growth. It's definitely resilient. Newest is less luxury, but had more growth. I like these companies, but I think they're expensive both now and before.
All right, go ahead. Let's do it. Miguel?
Trader asks, in the REIT sector, have I been buying the usual suspects?
I like them. With the rate cuts, they could do well refinancing their debt. If you choose the right segment, you can get better results. In the case of Alexandria, it's in the medical laboratory sector. It had a hype in 2021 and has been falling since. If you look at others, for example, I won't say what they do, but look it up or they'll demonetize our video.
Antonio, look up what this one does too. It also had a hype in 2021 and then dropped. And then there are others that are much more stable. That's why I was talking about the different segments. And I guess when you mention the usual properties, you're referring,
For example, to Realty Income, which just goes along steadily, no surprises. It's true they traded well above NAV. Issuing shares to GRL was very profitable. You dilute at twice the net asset value and by companies getting an accounting arbitrage. Now, valuation isn't far off NAV. Their money-making strategy is less effective, still good. And then there are others that are less well known. I'll bring you some of those too, so you can check out some other interesting ones. In fact, we've analyzed this one in the research as like Immobilien, which I find very attractive. We bought it when it was at 40-something here in 2023 and sold it at 70-something in June, so higher than where it is now. But it's a residential company, a residential REIT in Germany, in Tier 2 cities, which are actually the most interesting ones. We can see it has
good performance in terms of revenue. If we look at FCO or cash flow, hold on, let me compare. Let's see if it lets me here. I can't find it. Antonio, do you know where it is?
in the FFOS section.
No,
Doesn't matter.
I don't have it open. I have option strap open in case I need to enter an option, but I'll open the investing page too.
All right. This used to pay a high dividend. After rate hikes, they deleveraged for a year to improve the balance sheet. The dividend was €4. This year they've paid €2.45. This yields about 4.5%, very stable, with growth, no vacancy.
And when it comes to the balance sheet, which is always interesting to look at, we can see here how it fits around 300 million. You know debts are huge for REITs. That's how they operate. But they've deleveraged from 9 billion to 7.6, a much more reasonable level of deleveraging.
Not only that, but if we also look at the forecasts, they're expected to keep growing steadily, executing well, and so on, so you'll see reasonable growth. So there are interesting REITs beyond the usual suspects, as you were saying.
Going. Miguel?
Gladius asks us, hi, do you have any opinions on QXO and its CEO Brad Jacobs? Best regards.
Not you, Antonio.
My opinion is that Emerito Quintana loves it, and he often says that his thesis. In fact, at a Paco Lodero event, he talked about this company and said, hey, the thesis is that its CEO is Brad Jacob. Emerito bought in and got out because it got expensive. We could ask him if he still holds it.
As for Gladius, if you want my opinion, basically, the book he has, How to Make a Few $1 Billion, is really good. It talks a lot about how he did M&A, how he consolidated sectors. I recommend it. I don't know if you've read it. And what Antonio says is the same thing. Emerito says he's not willing to pay such a high Jacobs premium and that right now it's just too expensive. So that's what I can tell you. Well, it's
always a dichotomy. When you have quality companies, the price is usually more demanding. And when you have a management team that has proven they know how to execute and do well in different environments, the market isn't as forgiving either. Yeah.
but everything has a price. Albert? Mariano Solis, what do you think about MIT Food Group and Atreus Health?
I don't know about Atreus Health, but I do know about MTI. Well, I assume you mean MTI, not MIT.
I think you were referring to NTI. It's a pretty cheap company. They buy franchises or restaurant chains, and actually, I see this sharp drop. I hadn't noticed it recently. They optimize them because usually when they buy them, they're not profitable. Some locations close, others stay open, and so on.
But anyway, it's a solid, cheap company. They've been growing reasonably well. Looking further back, it's even better, as the COVID period always distorts things, though they didn't do badly during COVID. It's a company that has grown well, not just in revenue, but also in profit. Their margins have dropped recently. Inflation issues have hurt the restaurant sector, but overall, they've done reasonably well.
And in terms of cash flow, I haven't followed it for a while, but I like their strategy and I don't think it's expensive. More research would be needed, but I like the business model. I also think it's defensive and can execute well. After a drop like this, things get more interesting. So, Antonio, do you follow this?
MT? It's not a company I follow. Obviously, I know it. It had its moment. But no, I don't really know it.
Legal.
Antonio was waiting for me to say it. I mean, I'm kind of a video geek, to be honest. We have a thesis on the channel. We have.
A thesis. I recorded it myself. It's on Zambin Network. Beyond that, I know the brands it owns, but I don't follow it. Their sales figures, revenue. I also like.
This investing tab because it gives you valuation metrics. You get an idea immediately if it's expensive or cheap.
So we can see how it's a company that's now at a much more reasonable point than it was before. Although obviously the growth is also changing a lot, because when we look at it, hey, why is this happening now? Before, it was valued at 4 times sales. Now it's 1 times sales. Sales growth isn't the same as before, which makes sense. We also see the Piotrowski score indicating financial strength. It's deteriorated a bit, but 6 points is still good. The free cash flow multiple, including debt, is 13.7. That's good. It's fair. If they return to growth, boost profits, this will improve. But I like this tab for a quick look at value.
Let's continue, Miguel. There are a lot.
Trader says Diageo and the utility are doing well. I'm not sure if that's a question, but
It's a statement.
I wouldn't say Diageo is doing well. It's doing terribly, to put it bluntly, because if you look at how it's been performing, it was trading at almost 4,000 and now it's hit 17.5 pounds. Today it's doing well because it's considered relatively defensive, but that's after taking a huge hit. And as we were saying earlier about valuation ratios or multiples, the problem is that this was valued at 30 times free cash flow or even more. Now you might say, hey, it's still valued at 30 times free cash flow. Yes, but that's based on fake free cash flow, depressed by debt issues and an extraordinary capex cycle. Anyway, there's been massive multiple compression as expected because what was priced in for this company wasn't reasonable.
The alcohol narrative, people drinking less, we've discussed. Today it's doing well, and utilities too, as their defensive sectors, as Trader says. But overall, it hasn't done well.
Ardilla 1919, hi there. What do you think about Vidrala?
I thought you were going to ask about this, Kafan.
After the drop it's had, well, in the case of Vidrala, I like both the tailwinds for the sector and the company itself. I think it could struggle in a very bullish commodities cycle, ultimately because of rising input costs.
We saw this in 2022 with the energy side of things, but I like it, and maybe it's just a bit more expensive than Verallia. You know, there aren't many investment options here, or at least not many interesting ones, but I like it.
And Ardilla 1919 does too. Why didn't International Petroleum IPCO drop 50% on the stock market even though the price of Brent crude in 2024 went from $80 a barrel to $58 a barrel?
Yeah, that's right.
Well, it hasn't dropped because of two reasons. Someone might look at this and say, if oil has cycled, how has this company rocketed? March 2020 was extraordinary, but if we look at the trend and how this has compounded, there are two reasons. It has a near-term catalyst, finishing construction of the Blackrock section. This will increase production by 60%. The market knows this. And second, you have landings behind it, which gives a valuation premium due to capital allocation with buybacks, their management of the balance sheet, and their ability to execute well. The market rewards this because if it were just for
If we look at the results, we can see it here with all the capex they're spending for BlackRock, etc. This isn't generating anything. They're even having problems with operating cash flow, but if we talk about total cash flow, considering the capex they're making, things aren't going well for them at all. In operating cash flow, the big drop following the price of oil is evident. They're rewarding you for BlackRock and for the management.
Trader about OGO, good is good, since mentioned. I think Q&A go right? Yes, improved a bit, but obviously the drop there.
Yes, I understood your message, trader, but it was a bit of a joke from a green guy who doesn't seem to be doing well at all.
Alberia. Speaking of oil, Luisa Kotoriket, and with these oil prices, what oil company stocks do you like?
If by oil at this price you mean it stays at this price, very few, because returns are quite low. I like PTAL.L. PTAL.L generates good returns. Even at these oil prices, it's one of the few still profitable. but you have the
jurisdictional risk where it's located in Peru. And that's why, obviously, look at where it's been trading since April 2022. It hasn't dropped. It also pays a reasonable dividend.
So it's cheap, but you do have the jurisdictional risk. And then there are others like Petrobras, but if I expected oil prices to stay at this level, I wouldn't buy oil because it just makes no sense. You see Petrobras in the same way at the end of 2022 with oil price peak having paid out dividends. These companies won't suffer much unless oil drops to $40, but even then, they'll suffer the least as others will already be going bankrupt.
So Albert, both Roman and Camillo don't want to get out of oil companies, and you've already talked about Petrobras, but come on, tell us something nice about Petrobras. Does it seem excessively cheap?
Yes, it's very cheap, but you still have the usual jurisdiction issues. At the end of the day, you're in Brazil, and that's a handicap, especially when it comes to a re-rating. You're never going to get a sky-high price in terms of multiples because they just can't recognize it, and the dividend is also going to take a big hit when oil doesn't bounce back. Of course, in the end, you know it's straightforward.
And Camillo, that question, excellent. Look at Ecopetrol, with the shift toward a pro-hydrocarbons government and the untapped shale oil reserves estimated at 6 to 10 times the current reserves. And Camillo replied, saying it's a binary bet, but I'm not so sure that Colombia is going to go through a political roller coaster.
I do think it's going to change, but the problem is they've also recently shifted quite a bit toward gas instead of just oil or mainly oil. It's true, as you say, that they still have some deposits left to exploit that could change the balance again. But when it comes to gas, I don't find it that interesting.
Sorry, let me just pause for a second before we continue. I'm going to share my screen for a moment to show you something because, well, Dequan, it seems like we weren't completely satisfied with it. This is exactly what we were just talking about. And I was telling him in the chat that I think that's the right mindset. I mean, hey, I don't trust anyone who talks about returns, and so I'm beyond a fund. But just so you can see, this is what research subscribers wake up to every Saturday. Well, first, I'll show this here. I don't think there's any problem in mentioning this position, which Alda. Every trade that Albert makes in the model portfolio, he tags everyone in a Discord with over 1,000 people and posts in real time what is being done. Then, every Saturday, the weekly return is shared, as well as the yearly return and the return since the Discord started. If interested, email us for Discord access. You can scroll back to when the service was created, make your own Excel sheet, and do all calculations yourself. If you want to do the audit work for free, there you go. The invitation stands. I'm sending it now, not joking. The ball is in your court. Let's continue.
Pedro Perez, greetings. You can check out Water Intelligence.
I followed it a while back. They marketed it as a compounder, but honestly, I haven't checked where it is now. It got really popular in 2021, seemed like it would take over the world, and that's when I stopped following it.
No, it's a stock I've heard a lot about, but no, I don't follow it. I don't follow it.
Hey Antonio, before we wrap up the topic or while Albert looks up Water Intelligence, I also wanted to mention, actually, I heard this recently, that all the new subscribers who are joining and so on, in the end, they don't have positions in the portfolio, they don't have certainty, and often it helps for you to see a lot of ideas from the portfolio. Because in the end, if you have a lot of knowledge about the retail sector, or the consumer sector, or telecommunications, and you know about AST, if you concentrate more, because I also read a question about portfolio concentration, there's a methodology, or at least what I interpret as a methodology, for the portfolio. Maybe if you know more about a company, you can concentrate much more, you can get into certain companies that you might not see otherwise, or that you do see. So I see it from that point of view, because a lot of times many subscribers join and they don't have those concepts clear.
A model portfolio is good to have. It exposes you to the market and your ideas. There's no point in just saying, I would buy this. I actually simulate what I would buy or wouldn't buy. The RISA service is much more. Take the restaurant report. We don't say, buy this stock or that. Instead, we analyze all restaurants. There's a question where someone asks about that sector, and I think that's the point. It's an investor's guide. What happens? And I think that's the right mindset. Today, with many people online, and we're creating content, you need a mindset of not trusting blindly. But it's disrespectful because, with all due respect, you're calling the 1,000 people inside idiots. I have to say it too, and I'm just saying it how I feel. All right, let's keep going. Look, speaking of model portfolios, you would have gotten more returns if you had concentrated on the main positions instead of diversifying so much.
Not only that, but if we included other positions I ruled out, say, for being smaller, less liquid, etc., which we've discussed, just to play around, we mention other ideas we find interesting, even if they're not in the model portfolio. Examples could be DMX, which is clear, but also someone asked earlier about GMS, which we mentioned at 4, it went up to 22, and now it's at 16. We discuss them, share them, but they're not in the model portfolio either because of size, liquidity, and obviously, we know there are 1,000 people involved, for better or worse. People
Who don't know about options, who don't know how to trade options.
The model portfolio's goal isn't to maximize returns or be copied, but we know some follow it closely. We must be careful. If I'd taken out more, yes, much more. Most subscribers who keep up to date and use it have gotten better returns than the model portfolio.
All right, Miguel, let's continue.
Pedro Martinez asks, what do you think? Are you familiar with Mercado Libre?
I don't know much about it, but it seems like a rocket to me, obviously. In the end, well, you know what it is. I don't want to call it similar to Amazon because it's an ecosystem. It's not just the logistics part, etc. But in South America, so this is a real rocket. Well, first of all, the price reflects that as well. Obviously, it was trading 10 years ago. From 97 and now, even after drops, it's at 2,337. So you can imagine the company has taken off like a rocket, as you'd expect, right?
In the end, it's an exponential revenue curve. At first, well, gross profit wasn't the best, but for example, initially it wasn't profitable, and then suddenly it hits a critical mass or the payment system, etc., which finally makes it possible. So it seems like a rocket to me, but in terms of valuation, I'm not sure right now how much.
This is trading at, whether it's reasonable or not. At first glance, just looking at the multiples, it seems a bit expensive, but obviously, if it keeps growing and executing like this, it's going to keep performing well.
If I'm not mistaken, looking here, there was also a premium paid for Marcos Galperin, right? Over there in South America, he's really well liked.
Yeah, and as I said, with good reason. In the end, when you've executed like that,
Trader says you didn't include Irene in model portfolio you talked about.
Of course, there are a few. We play them. If someone took advantage, I hope it went well for them. Obviously, others haven't gone well. We're not going to say that everything we share or do turns out great, if only. But the net result has been very positive. Delphina.
Errol Moncler. With the peace agreement in Israel, could that have a positive impact on ISMO?
Yes, there were several risks. The first is interest rates, which will help, because obviously lower interest rates will benefit the leasing side. And that's just how it is. Then there's consumer confidence, which still needs to be fixed because we see that things haven't really picked up yet, but well, there's nothing they can do about that. And then the third risk wasn't so much the war itself, but as you know, most citizens there are reservists and so on, so they did have some staffing issues from time to time. So now that gal is gone.
Javier Peroy, what is the textile sector like at Inditex? Inditex.
We talked about it here. Antonio, Q&A sessions. No, it was in the course on the stock market, in the stock market course.
It was the example you used to teach how to do a discounted cash flow and so on. Also, a good example.
Exactly. So, using this discounted cash flow example, at what price is it trading, what assumptions are behind it, and so on. To me, it seems pretty expensive. In fact, if you have, with my assumptions, I get that the price, let's say, in quotes, should be half. Obviously, the market is pricing in higher growth, a higher terminal value, a lower discount rate, and so on. But for me, it's expensive. Obviously, I can't argue with the quality, but it's expensive.
It's interesting to see, somewhat tangential to Inditex, how Pablo Isla, who was once its CEO and propelled the company forward, has now joined Nestle, and look, the market liked his first earnings presentation. This,
Gentlemen, my esteemed and honorable sir,
as often happens in Spain, well, we don't appreciate our homegrown talent, and he's truly exceptional.
I really love the saying that investment theses are about people.
Yes, a quality company.
I really like it a lot. Well,
But Miguel, then there's Warren Buffett who says you should invest in companies that could be run by an idiot because at some point in their life,
eventually it will happen, yes.
someone will end up there. So there's a bit of a dichotomy there. Hey, two quick things before we continue, okay? First, just a reminder, I see a lot of you are joining in right now. At this moment, there are 527 of us here. Today, at 11:59 p.m., the flash offer from Investing ends with up to 50% off on Investing Pro, the platform that, for example, you can see we're using. And with the link and the Locos de Wall Street code WS, the link you have in the description, and I'll put up the QR code in a moment, you get an extra 15% off, making it 65% total. And the second thing, we've been at this for an hour and there are about 10 questions left to answer, okay? So, from here on out, okay? The last one we're counting is this one about Nomad Foods. All right? We'll stop here. And for any questions that don't get answered, please leave them in the comments. If you're recent subscribers, I don't need to tell you anything. You could always ask Albert whatever you want, etc.
well, Albert, I'm going to use Luis Reynaldo's question to tie in with the one that just came in from Sergio Santos, who says, "Hi, is Nomad Foods a cash cow plus dividends plus buybacks? It's very, very cheap." I don't know if Antonio.
Yeah, of course, it's a classic. Oh,
It's in there. Okay, yeah.
yeah, it's in direct competition with Unfi and others. Ah, well, That's all I know about it, okay? I was just seeing that I got a notification. And hey, the live stream takes priority too. The takeover bid for Sabadell and BBV hasn't happened, which was expected. This had been known for a few days. It was kind of a bit of an open secret, and yet BBD's shares in the US are soaring, such is the market. When you see these, you're not muted, but your microphone can't be heard.
I'm saying it didn't make economic sense, since without the possibility of creating synergies for 3 years. The market understands that too.
So let's move on to something else. I don't know, Albert, Nomadico, we couldn't hear.
It's just that I don't know it. I was looking at it and had it on my watch list, so to speak. Yes.
Because that sector, besides, those of you who are in it know that we're interested in it. All right, Miguel, go ahead. You're the one in charge.
Raul asks, at the beginning you talked about the restaurant sector. Do you know Emrys?
Yes, I do know it. In fact, Inna.
Is it included in the report as one of the companies covered?
I'm not sure if it's an incomparable, but I do know that Arcade, who did it, knows it. So I'll ask him about it in more detail as well.
This is the Burger King franchise here in Europe, right?
It sounds familiar to me.
Right? Yes, yes.
They have Kentucky. There was Burger King and Pizza Hut, but
Raul ML2 Castillon, today is the first day I'm catching you live on Spotify. I listen quite a bit, as you can see, and a QE piece.
no, I don't follow all her stuff. Antonio, I don't know if you do. Don't let me get lost.
No, me neither. So, finally she mentions it, but way better than Colombia and Brazil. I think Trader is referring to the earlier question that.
Totally, yes. Better than Colombia, I think yes. Better than Brazil, I don't think so, but yes. It's a company that produces at a very low cost, makes money in any environment. We're seeing that even now, and it's cheap.
CZ Codesy asks, is GMS at yearly lows? I don't see any change in the thesis. What do you all think?
Same here. I also think it's really cheap. And now when they report results, which isn't long from now, it's going to take off just because they're going to announce new contracts, etc. In the end, it's been a year moving sideways, even with some decline. That's clear. If we look at 5 years, when we bought in, which was 4 years ago, it's gone up a lot, right? But since then, rates keep rising, utilization dropped this quarter because of dry docking, ship maintenance, etc., but it's still growing. And with rates up, utilization up, they've already deleveraged, they're going to start buybacks and dividends, so that's great.
And the last one, Albal, Mario asks, good evening, can you take a look at Academia AB?
That's an interesting one.
Yes, if you want to project it, Antonio, go ahead.
Look, I don't have investing open right now, but if you give me 30 seconds, I'll pull it up. That's interesting because... Sorry, let me share my screen. Can you see it?
Yes, those aren't the ones, Antonio.
No. Do you have the ticker?
But
It's at home. I've heard about it. Maybe it's not going to show up here, right?
yeah, I mean ACAT. ACAT.
ACRT.
No, D at the end.
Sorry.
I think.
Well, maybe it's not going to show up here. I'll look this one right.
That one.
That's it. That's it. Exactly. Education sector in Sweden. The other day, I already get confused about where we talked about it. I think it was in a roundtable. Someone asked Edgar about the education sector. Edgar, besides, is someone who knows the sector because he worked in it before having the fund and all that. He worked in private equity, did several deals in the education sector, and it's a sector he likes. The Swedish education sector is a very interesting sector. So, this is a company I heard about and put on a watch list of Swedish companies, but in the end, I never actually invested. I think I heard about it from a guest. I can't remember the name. It's impossible to. From Paco Lodero, whom we've mentioned today, I send him a greeting here if he's watching. He's a friend of the community. And in the end, as I was saying, the education sector is very interesting in Sweden. They have a hybrid model between private and public, and they even train people from abroad. In other words, it's an interesting company. I don't know what. Look, it has grown 55% in a year, and it probably did really well on the stock market. Yes, exactly. Well, look, it's been more or less flat. Almost all the growth is concentrated in this year.
Yes, and in Georgia Capital, there's a pretty significant education business as well. I also listened to Edgar. That's why.
I know about it.
I know about it.
Exactly. Yes, here it says Academy. Yes, Academy. Yes, yes, yes. That's what was confusing us, Mario. Thank you very much. So, well, as I said, that's how we knew about it. It's a company we should keep on our radar. Guys, we've reached the end of the Q&A session. Thank you all very much for joining us. 527 people now across all platforms. You know, make sure to subscribe on YouTube. And let me tell you, tomorrow is the third Friday of the month. You know what that means, right? At 8 o'clock, live, witching hour, Mano joins us. He told me today what he'll discuss. It'll be awesome. He'll cover the holy trinity of options, 3 strategies everyone needs to know. He'll analyze the VIX. Now is the time to analyze the VIX and give an overview of the market from his perspective as an options trader. Options traders have a mindset where they look at different market aspects. Miguel, Albert, thank you.
Antonio, we'll see you next week. Thanks, Drew.